Alright, so guys, Jeff here back again with another video. So today we're going to be talking about the bottom of the market, if the bottom of the market is actually over, and a lot of other, other indicators for us to really look at in the market. So of course, I don't want to really be showing a lot of things on the screen so that you guys can basically just treat this as a podcast. So I'm just going to get this out of the way first. If you look at my screen right now, I'm going to be showing you guys. This is basically the SPY at the moment, and honestly speaking, we found the bottom of the SPY on the 24th of February. And the bottom is very obviously due to the first day of the military action, the invasion or the war, whatever you want to call it, during the whole Russia and Ukraine situation, the first day of it actually starting. So I don't really want to call that. I don't want to plot that line as something that would happen very very often, but of course that line was actually something that really started this entire. Are we going to be seeing a new bottom in the whole entire market and such? And afterwards, we actually have two trading stops, which is on the on the 8th of March, and of course on the 15th of March. These are all, of course, when we actually have a lot of, if you actually realize them, they're actually all happening on Fridays, and usually that's when they are. Well, not really just Fridays. They're usually happening on days that people are more concerned, when more uncertainty is actually around in the market. So today, I want to be talking more about, like, is the bottom actually here? Because I feel that a lot of investors are actually kind of staying out of the market in general. Everyone is afraid because there's so many uncertainty, and for people who actually entered the market in 2020 and 2021, a lot of us probably think that the stocks market is a joke. The stock market is basically a gambling den and such. But honestly speaking, I don't really think that's the case, because the stocks market has historically been a very strong financial tool for a lot of people to actually accumulate wealth across time. And I do think that because a lot of time for a lot of us, it's actually because of the way we actually invest. Okay, for when I actually started really looking into stocks investment, it was in 20. Well, I first started doing stocks investment in 2018, and then of course in 2020. No, actually in 2021 was when I really got very very interested into the entire stocks market. I started day trading and such. So I can tell you guys that I don't want to say I learned a lot, but honestly speaking, I do think that there are a lot of mistakes that I will not be recommitting in the future, if I can put it that way. Because honestly speaking, like, as just to throw an example, a comment that I actually just replied to one of you guys on my latest video. So the comment basically was asking me, like, am I going to be investing into the Chinese market again? And I thought that, like, honestly speaking, I only get into the Chinese market if they are considered as undervalued. And the moment I had that thought in mind, I immediately had to kind of backtrack a little bit and just think about it. And because in this market, there's no such thing as a bottom. There's no such thing as a bottom. Of course, like I said, if you're talking about your SPY, you're talking about your Apple, your Microsoft, your Tesla and such. Of course, people can say that, of course, there are bottoms for them. They will never go to $0. But a lot of times you'll be surprised that, aside from the people who invest in the index and the people who invest in the blue chips, people who like to stock pick usually are looking at the smaller caps company, the tech company, the growth companies and such. And it's very hard for you to actually put a value on them. Okay. As much as in the past, I have put out values for Palantir, I put out values for Snapchat, I put out values for SoFi and such. Robinhood, like, think about that. Okay, a lot of all these stocks, a lot of time I like to put a value on them simply because I do some form of a calculation, especially according to the earnings report that they give. We do know the amount of cash and the cash equivalent that the company actually holds onto. But a lot of companies these days, they have a lot of cash. Okay, cash isn't the issue. Okay, but even if you are investing into the company, you're investing more than just their cash alone, because that's how low their stock price is at the moment. Okay, and, like, if, like the example that I gave yesterday, okay, if you're investing into Robinhood, right now, if you invest into Robinhood, you're investing into 14% in cash. Yeah, like you get insane amount of value from investing into a lot of this sort of company where they hold a lot of cash. Shift Technology, Robinhood, SoFi, all of them. So I do think that intrinsic value kind of just go out the window, especially as time goes. I'm not saying that the bottom is finally over, because let's be honest, okay, we got a whole week of rally. Okay, just to give you guys the picture reference again, over here, let's see if we can just do day in the day form. Okay, we had 1, 2, 3, 4. Okay, other than a Monday that was down, we got 4 days of euphoria. Okay, it's very, very good that we saw 4 days of euphoria. And even for Bloomberg, they're saying that the 5-day bounce of 6.2% was a ray of light for those hoping a 2-month selling binge by professional speculators had been severe enough to account for all the bad news weighing on investor psyche of late. Okay, and even then, people are saying this week the S&P 500 staged its biggest rally in 2 years. In 2 years, as the Federal Reserve threatened to raise interest rates as many as 10 times through 2023. So, of course, we have to get back into the whole interest rates kind of thing. And, this kind of begs the question, okay? Because earlier in the year, when we were talking about tapering and raising rates and such, we were really worried, because the moment we heard about increasing rates, the market kind of just shivered, and then people just started selling out, because the moment you hear about an interest rates increase, everyone just dodged out of the market. But right now, it's kind of in the reverse, okay? Because people really understand that if they do not increase interest rates as aggressively as they are right now, and of course, as aggressively as they did back in 2003 and 04, they realize that hyperinflation is going to kill all of us, okay? And the worst part about hyperinflation, that if hyperinflation do not go away, it will eventually become stagflation, and then this recession is going to be a very, very long one. Okay, so it only makes sense for them to really be going through with this multiple rate hikes and at quick succession at that as well. Of course, earlier in the, I think it was, I would like to say the first quarter of 2021, or the second quarter of 2021, we were talking about tapering. Okay, we're talking about how the Federal Reserve is going to be tapering. And after the taper, once the taper is done, there's going to be an increase of rates. We all know that was coming. Okay, we were all very, very well aware of that. And of course, by all means, we are kind of worried about the entire market. What if we suddenly see a 75 basis point increment in one meeting? What if we see 50 basis point and such? If James Bullard suddenly think that we're supposed to hit a 1% by mid of 2022. This kind of fears were actually being priced in the market. So, of course, at that point in time, people were very, very worried. But let's be honest over here. Right now, we're looking at 7.9% inflation year over year, and we're not even taking into account of what is going to be happening in March. Okay, when the WTI crude prices actually get priced into our CPI, chances are we're going to be looking at 8.3, 8.5% inflation year over year. And when we start to see the 8 figure or even the 9 figure, hopefully we do not see the 9 figure. I do hope that we hit 8.5 and we kind of establish that is the peak, and then we start to find a trajectory downwards. Of course, I do not think that that's going to be happening, simply because, like I said before, March, April, and May is something that we have to really see. And even Jerome Powell said so as well. I've been saying this before the FOMC as well. March, April, May, simply because the prices movement usually happens in a quarterly basis. And, prices of wheat, prices of palladium, prices of aluminum, prices of nickel, prices for oil. Okay. These are all the commodities that's being affected by the whole Russia-Ukraine situation. And the moment that all these commodities are getting priced into the market, there's going to be a very, very weird influx of supply and demand going around the market. People who need oil, people who need substitute for oil, okay? Because oil is too expensive, people will start to look towards other energy sources, other electricity sources and such. Same thing with wheat, Okay, people who do not have wheat, people are gonna be looking for other commodities, be it for coffee, okay, for like I don't know, I don't know, other carbs like potatoes. Okay, there's gonna be a commodity shift the moment one supply chain of the commodities is being affected, or even in the worst case scenario, collapsing. And then, of course, afterwards, then we have for your aluminum, your nickel, and your palladium and such. Those are under the precious metal side of things. Oh, well, I wouldn't really call them precious metals because nickel is quite a humble metal. But even then, you can look at London Metal Exchange, the LME. They are also getting a lot of spike over that. Okay, they're going up and down. They're going up and down. Even for the LME, they have to close down for 3 days of trading, which is kind of unheard of. Okay, so of course, like I said before, when commodities have this sort of huge influx of supply and demand, people usually have to start looking for other alternatives, and the other alternatives will have an increase in price simply because there's less of the 100% from the get-go. And that's what actually causes your inflation triggers to kind of go all over the place. And that's why I said March, April, May CPI. That's usually when we actually see the main bulk of things. And of course, I do see that March is going to be more of like we are going to suddenly see a 1% or 0.9% of month-over-month data. And then of course in April and May it's gonna be more of a disinflation. No, by no means we're going to be seeing any sort of deflation yet, but I do think that we're going to be seeing some form of a disinflation where we will start to see maybe like the 0.6%, 0.4% and such, simply because they have to kind of consolidate the amount that they are actually taking into account. Like for example, for people who are not getting the oil, I was like, okay, so the amount of people who are actually transforming all their automobiles who are going via the whole fossil fuel route, how about we all change them all to electric cars? And of course, similar to that, when you move over to the electric cars, then you also have to take into account electric cars. Then there's going to be a huge bump up in either the new cars and trucks or the used cars and trucks. And then when the new cars and trucks goes up, it simply means that then palladium is actually being used again, and nickel is being used again, because those are important, the important things that you need to make batteries. Okay, so there's always this kind of supply chain and demand and such, and because of prices that is being affected in Russia and Ukraine, it simply means that there's going to be this kind of ripple effect across the entire commodity chain. So of course, it simply means that, just to get back to the point of this, it simply means that inflation is not going to be at its peak just yet. So there is a very, very good possibility that we'll see something in the north of 9%. I don't think that we're going to hit 10%, because I do think that 10% is the magic number where people actually get so, I would like to say, fuddish. There's a lot of fear, uncertainty, and doubt the moment we hit 10%. Like 10% is that magic number where people start to panic. And because of that, we do not want to hit that 10%, of course. And which is why I do think that north of the 9% would most likely be the case. And of course, by the time we actually do hit 9%, chances are our interest rates are going to be at about 1% or so as it is. Okay. And 1% is not really crazy either, because at this point, 1% Fed fund rate, it kind of makes sense, because let's be honest over here, we are taking into account that there's most likely going to be 9% inflation. And even for the government sector, okay, even for Congress, they are paying them an additional 20% in their salary itself, simply because they said this is for us to actually hedge against inflation. Everyone getting a 20% wage increase. So I don't want to say that they are actually valuing inflation at 20%. I really don't. But they are forward-looking enough to give them up to a 20% raise. So that's a good thing. Okay, it simply means that the Congress is also working very hard for them to really find the secret sauce. Okay, they want to get inflation down. And of course, this is going to be going into a very, very long conversation if you're really talking about inflation going down, how to get inflation down. That's going to be, I've done countless of videos about this. So I'm not gonna be babbling about that over this. So what I do want to say is the bottom of the market actually here? And personally speaking, I'm not gonna lie, I am so close to saying that it is over. Okay, I'm so close to saying that the bottom is over. Because think about it this way. True that we just saw the 4 or 5 days of insane rallies that we have never seen in the past 2 years. Okay. And of course, we also have good progress with the whole ceasefire with the Kremlins and the Ukrainians. Oh, my screen just went black for a minute. But yeah, we do have like a possible ceasefire with the Kremlin and the Ukrainians. So that's a very, very good thing. The FOMC uncertainty is all gone because we already properly understand what Jerome Powell sees for the market and what Jerome Powell intends for the market to actually do, which is very important. Okay, and thirdly, is basically this whole Russia situation. Of course. Okay, I do want to say that Russia. Okay, this is not going to be the Kremlin and the Ukrainian anymore. It's more going to be like Russia and China. That's the only uncertainty that I do have right now, because right now the U.S. officials are saying that there's a possibility for China to actually help support Russia by sending them arms, sending them trucks and such. And the more support that Russia gets from China, the less this ceasefire thing is going to come to fruition. And that's why we are worried. Okay, as close as this a ceasefire policy between the Kremlins and the Ukrainians is coming to fruition, okay, we do want this to happen, right? Like over here. But if Russia and China is still going to be working together, China is still going to be sending arms, China is still going to be sending trucks, China is going to send aircrafts and such to support Russia, the less Russia is going to be thinking that, oh yeah, I don't think we can win this war, hence we should go for this ceasefire. And that's my concern, because China don't have to answer to anyone. No, I'm not gonna lie, China don't have to answer to anyone, and China can easily do that. And there's one huge uncertainty for me, which is why, like I said before, on Friday, usually the market likes to be a little bit more fearful. Well, not this Friday, clearly. This Friday, we saw so. But even then, okay, I do want to say, okay, we did see 1% on the SPY. But yes, I will still say that it is quite scary how euphoric we are. But of course, in a smaller markets of things, if you were to look at the Russell 2000, I think the QQQ is doing quite well as well. So, in general, the things that on Friday, especially the general rule of thumb for myself, on Fridays, that's when I usually see a lot of sell-offs, because people do not want to really hold on to what the weekends have to really offer to us. The weekends are usually the one where we suddenly see new political movements that come out from either the US. There's going to be new bills being introduced. There's going to be someone getting fired and such. Which is why I still try my best to do read up on news on the weekends, because you never know. There might be very, very important information that actually do come to surface during the weekends, and that will severely affect the market. And yeah, so I do think that because of this sort of thinking, people don't really like to trade or keep invested in the Friday market, especially for swing traders. Day traders is just beside the point, because day traders they get up before the day even end. But swing traders, sometimes for swing traders, because I was a swing trader as well, but I still am a swing trader, FYI. I do get out of my swings on Fridays, because the things that I don't think is going to be good, or not is, of course, if my swings are actually very, very dependent on a Friday movement, such as a put that I do have on Chinese companies at the moment, because I do think that there is a very good possibility for us to really see some form of a Chinese supporting Russia movement coming out in this weekend. I'm not sure. Okay, I'm not sure. But if that do happens, I'm going to be making a lot of money, because then if that happens, it simply means that sanctions is going towards China very, very soon. People are going to have mass panic to get out of China. Oh, just my own opinion, of course. And which is why I do have puts on Chinese company. I do have puts on two companies in China. One being TME, which is Tencent Music, and the other being Futu, which is Moomoo, which is the trading app that I'm using. And if you want some free stock, use my link right down below. But anyway, yeah. I do think that buying puts for Chinese stock right now, personally, for my own hedging purposes and such. Of course, this is just about a $2,000 movement right here. This can easily be a speculative thing for me to either lose all this $2,000 completely, which I'm gonna be completely alright with as well, or this 2,000 can easily flourish up to become a $10,000 play, which I will definitely be very, very alright with that as well. So yeah, that's kind of thing about the stocks market at the moment. I don't want to say that the bottom is here, like the bottom is over already. Right now, we're just going to go all the way to the moon because uncertainty is still valid. Okay, and of course, people are naysayers are gonna be saying that. Of course, uncertainty is gonna be here. There's always uncertainty. But I do think that what the U.S. officials are saying right now is kind of like a foreshadow of what's going to be happening. Because let's not forget, okay, the US officials also said that Russia is going to be invading into Ukraine in the next 2 weeks. And they did. Okay. And of course, if we want to go via historical means with the whole Iran and Afghanistan situation, it's going to be hard for us to really see through to the entire thing. But I do think that the US officials are going to do something here. And we even have concrete evidence that China has been sending arms and trucks over to help Russia with this war. So I don't think that it's going to be a fast shout, especially with Xi Jinping already knowing that Russia is going to be invading Ukraine, and he did nothing about it. So I don't think it's a fast shout for us to really think that to really see for China to really go after Ukraine essentially by supporting Putin even more. So if this uncertainty is going to be here, I'm just not going to be that comfortable with the market. And okay, but by no means am I like not invested or anything. I did not sell my entire portfolio or anything like that. Okay, I'm just telling you guys right now because the things I do like to be invested in the market, but I just like to speculate about a lot of things in my own mind. And I just think it's fun that way. But yeah, that's why I do think that I sincerely hope that the bottom is over, but I just hope that people will not be like 100% in plus leverage plus a margin, whatever it is, borrow money from the bank and just throw everything in the stocks market. I hope people don't do that simply because we are not in a bullish market at all. Okay, we have entered a bearish market territory, I think about 2 weeks ago. So the moment we entered the bearish market before the Russia-Ukraine thing even happened. So imagine how bad it is now. So I would say, just be cautious. Get on margin as much as you can. Do not use the margin. Margin's gonna kill you. Like I trust me, man. I've used margin a lot, and margin can really add up. Okay, like if every single day you see that margin is only taking up about like $60 a day, but margin adds up. Okay, so but yeah, anyway, that's all I have for this video actually. Personally, just for a brief summary for people who do not really understand or were on autopilot listening and such. I do not see the bottom of the market yet. There is a possibility for the market to bottom even more. Although we did see a huge increase for the week with a 6.2% increase, but uncertainty in especially uncertainty with the war is still around, and because of that, I do not think that the bottom is here. But let's hope I'm wrong. Anyway, that's all I have for this video. I know it's okay, slightly, but apparently it's not that long in comparison to my other videos. But anyway, thank you guys so much for watching. Check out my other videos. I'm going to be posting videos every Wednesday and Saturday. And that's, of course, besides all the daily videos I actually post on the daily news of every single trading days. Of course, Go down to my description box below to get some free Bitcoins via Gemini and also Coinbase. And of course, get some free stocks via my Moomoo link and also my Tiger Brokers link. If you're a Singaporean and you have not really gotten into Bitcoin or crypto in general, use my Gemini link. Do not use my Coinbase link simply because Coinbase do not support Singapore accounts yet. But anyway, thank you guys so much for watching. And I'll see you guys on Monday. Thank you.